Good morning, everyone, and welcome to the European crossover webinar. We are seeing the euro kind of slide back a little bit, and we're seeing a little bit of strength here in the dollar. Let me clear this out. A couple of things here with the euro that I want to go and take a look at. We're looking on the 30-minute. One of the things I like to look at closely, because I've been saying, with some of these currency moves, although we might start to see the dollar finally start to give a little bit, but, it's, 3 steps forward, 2 steps back, 2 steps back, 1 step forward. These trends don't last very long. Now, that being said, on this move that we had in the euro dollar, and let's take a look at this. I think that the euro is going to continue to move higher, but on a very short-term basis, let's move this here. We've come up very close to the 61% right here at 1586. Fairly close. And we talked about one of the things I posted I think about 3 times in the room was this move to 1550. And I think the euro can still push higher. But that being said, and I think that with the work that we did here, and we mentioned this about a week ago, is, eventually if the euro breaks higher, everybody's going to be talking about all the work that was done down here. Of course, we've moved lower, the same thing here. But look how much work's been done in this area. So we can really still, to a certain lack of better words, we can actually find ourselves in another week or so looking at an area where we actually launched, much higher. That being said, on a short-term basis, I guess some people still have some concerns. So when we look here at the euro, we came up here to this 1550. Well, we're able to get above it, and you can see the significance of the 1550. And we're looking at it on the 2-hour chart. Let's pull this back a little bit. And I think I had to actually put it as a 4-hour chart for a little bit better perspective, which I usually don't go with a 4-hour, but it gave us a better indication of some pretty good volume that came across there. Now we're able to edge a little bit above there, but we're fairly close here to this 1586. And really the market was in a position where it could have punched even higher, but once again, the 1586 is a 61%, and we did make it up here to basically right here at 1570. It's 1569.07, or just call it 1570. We're pushing lower here. Now, one of the things I want to look at is we always focus on the short term, or I do. Look at the exponential moving averages. Now, one of the things that I've talked about on the 30-minute, it really helps me to stay on the right side of the market. More often than not, I find myself trying to take the other side of the market too quickly. So we did go in, and generally when you see, we've talked about this before, all this is basically almost kissing the line right here. But generally when you get, and there wasn't that much separation, but generally when you get a move like, we've been on a buy, and you flip to a sell, and you flip quickly back to the buy, although there wasn't that much separation, what happens is the momentum starts to shift lower. People start to say, I knew it. It's time to sell it or get short. And then the market quickly flips back. Then you find a lot of people on the wrong side of the market, and generally means that move then ends up pushing and extending much further. Well, certainly we did go on and see that here, but I'm saying is anyone that's short, now they find themselves on the wrong side of the market, and stops are here, there. And bulls who were saying, hey, I'm just waiting to find a great place to enter, and then they go, this market's getting away. So generally what happens is you get a further extended move, okay? That being said, look, we had a pretty good separation. I usually don't look at that, but you can see the differentiation here between the slower exponential moving average and the faster one, okay? Pretty wide differential, which should be expected because of the move we had, but it stayed fairly wide. And now look, we're not there yet, but we're close to kind of like possibly generating a short-term sell signal. Possibly. I still think the euro looks better overall. I'd rather be a buyer than a seller. That being said, could we test a little bit lower? Yeah, technically speaking, we could, only because we've had the opportunity for this to punch higher. My thoughts would be, when I got up at that, heck, who knows where you're going to find this doggone euro. It might be at 1590, might be at 1605, but you can see it kind of gave it the old, as the saying goes, the old college try, and it just hasn't been able to do anything. Now, we're looking only on the 30-minute here, but you can see it's starting to pare back. And what it means is, in this particular situation, is anybody who's long, they got long late in the game, Well, they're going to go in and pressure them. Now, there's some support in here, but we already came down here to this 1534. I would have liked for this market to dip down the first time, and I thought that would have been a great buying opportunity. And certainly we did go and push in. Look at, if you look at it, look how much we got down as low as, what was it, 1534, made this run up here to, was it 1558, almost getting to 1560, and here we are paring back. So it's going to put some pressure. I think overall you got to be a buyer of the euro, but it really opens the door in case they want to put some longs that were late to their feet to the fire. Well, the support comes in right here. You can see it at 1509, essentially. But 1507 did a little bit of work. Would be the 23% of this entire move from 1307. We'll put up the fib for example purposes right here. There you go. So a good confluence there. Okay, 1507. I think that'd be a good area if you. I myself, I was talking to Eric yesterday, and I thought, I think you'll be doing good. I don't think this market will probably be able to get much below 1521, which is not a bad place. You can see that right there, 1521. So if you don't want to miss a potential good strong move higher in the euro, you can probably start to go in and come in around there. But this will be a good area right here, 1507, and from a 2-hour chart, there's some good demand at 1590. But you can see some pressure coming in on the euro, and why maybe the market says, you know what, we try to punch it up. We did get above this 1550, and maybe the market puts a little bit of pressure on those that may have come in a little bit late in the game. So just want to go on and point that out. And you can see here with the dollar index, the area that I was looking at was 1538. Remember, that was the overall initial target. I think that we can move much slower, but wow, we really overshot beyond that. We actually got to 21, the market trying to pull itself up and then continue to, move lower here. And let's move this. We can take a look quickly to a 2-hour chart. But we did get overdone here. So we find some support and get a bit of a bounce. How much further can they move? Well, the 23% on this would be 95.49. But remember, 95.38 was that target. Well, we've already made it to 95.33, so maybe we'll be able to push a little bit further. Hang on. Do we see anything on the 30-minute? Well, a little bit right there, which is 37. So maybe we can push a little bit lower. Maybe they'll pressure the euro possibly a little bit further. So once again, we talked about that 1521. I think if it were to make it down here, this 09 area, it'd be a bit of a scare there. But don't forget, one of the things you want to keep an eye on is the exponential moving averages, because it's going to put the market then on the defensive, although I do like the euro overall. Euro, as far as being contra to the dollar index, the euro dollar comprises 56% of the cash dollar index. So generally they almost trade inversely. Another mover was here on the dollar yen. Boy, we talked about that, and sure enough, finally this thing started going and find some good selling in here. And let's go and punch this in here to the 2-hour chart. Boy, this market was able, and it was really hanging around this area here. We talked about that 890-ish area here, but it really was the 929. We talked about, that key weekly area, and certainly we've seen this dollar yen going and pair back from there. Let's just go on and take a look at economic reports coming into today. And then we'll just take a look at some quick news. Italy retail sales came in a little bit stronger. That probably may have helped the euro initially. Well, like I said, by the time that was when we were coming on air and hasn't done anything here. But as we come into the States, we know we're lacking for data. We do have jobless claims. I don't know if they're going to have jobless claims or not with this government shutdown. But I think obviously the big focus is what we had last week on that great NFP. We do have Canadian building permits and Canadian housing price index at 8:30 Eastern. And that's going to be it. I don't see anything, like I said, the jobless claims, maybe we're having it, maybe we don't. But once again, I don't think you could read too much into that jobless claims after this strong number that we had from NFP last week. We're going to take a look here at the news. You can see how the pressure continues to remain. So, like I said, when you look at this on a short-term basis, you could even look at this on the well, maybe not so much the 5 minute. That's probably a little bit too close for most people. Although you can see here that this has been on a sell from right here, and you can see how it remained in that sell. So when you got this up run here, the market still, the exponential moving averages did not close over. Now I don't use a 5 minute. I pretty much stay with the 30 minute, but I use the 5 minute for a very short term overview of the market. Here, like I said, I just gotten up and I already saw the market already just dipped and started moving up high. I'm like, oh my God, and I think that 1530 was a good area we saw it on the 30 minute. But you can see how quickly this started to move up. And if you think about it, technically speaking, we quickly moved all the way up, and then we start to run out of gas. And here's what I'm talking about. You see how the pressure now remains. So what they're doing is they're catching people that were long and late, and they're putting that pressure here. And once again, my concern now is you see we're close to crossing over on the 30 minute. And that's going to keep that downside pressure then. So in this particular situation, I'd be a buyer on pullback, but then on the rallies back, I'd get out until I can get the momentum to switch back. But we shall see. But I'd rather be a buyer than a seller overall. Let's go on and jump into the news real quickly. And you can see, look at the dollar index. This is 95.34. We talked about that 38. Although it didn't hold it that very well, but 95.49 would be the 23% of that move, which probably would confluence with the euro coming down here. And I want to be a buyer down here. They might push a little bit further, but overall, I want to be a buyer of the euro versus a dollar. Let's go on and move into the news quickly. Just want to touch up on that. It says that obviously the big news was on this Canadian dollar yesterday. The Canadian dollar strengthened to a 5-week high against the greenback on Wednesday, boosted by hopes of trade deal between the U.S. and China. I think they're basically saying, look, can you give us a bit of a rope here? Maybe that rope is 3 months or 6 months. We're talking about the Bank of Canada. Chances of a rate hike by December rose to 45 from 30%. I think it points to the front of the Canadian curve is just too rich. The Canadian dollar is expected to rally in 2019, recovering some of last year's declines. Stocks and prices climbed after talks between the two world's largest economies raised hopes of a trade war could be averted. Like I said, so we spent some extra time on the year and some of the technicals. And there's not that much news, so we'll just quickly fly by this. Australian and New Zealand dollars tired of tariff talks. The Australian and New Zealand dollars surrendered a little of their recent gains on Thursday as Sino-U.S. trade talks ended without any clarity. Well, that's certainly going to be a bit of a worry then for the Aussie dollar because we've had such a phenomenal run back on this move. And let's go and click on that quickly. And certainly we've come back here. Look at this. Right here. Let's go and come back in here. Certainly have given back some of these gains here on the Aussie dollar after a pretty phenomenal run that we had here on that. Let's go on and come back in here to the story. In any case, the meetings were not at a ministerial level, so we never intended to produce a deal despite the market's fervent hopes for a speedy resolution. The Aussie dollar faded back to 71.58 after topping out at 71.94 overnight. Both currencies were still benefiting from a change in policy track by the Federal Reserve. Presidents of 4 of the 12 regional banks on Wednesday said they wanted greater clarity on the state of the economy before raising rates further. Well, that certainly makes sense. Minutes of the Fed's December meeting showed policymakers widely shared the view that risk from the markets abroad made the appropriate extent and timing of futures hikes less certain. The only thing that likely gets the Fed to go faster at this point is a rapid and sustained move up in inflation. Well, I don't see that coming. Indeed, we think there's more likely that the headline inflation undershoots the Fed target significantly in the quarters ahead. The Fed set a very high hurdle for the further tightening. The Fed's dovish turn joined up with soft inflation data out of China to underpin a demand for fixed income debt. And let's go here. take a look. Okay, there we go. Yeah, I want to cover the dollar, and then we'll just touch on what the outlook is before we jump into the analysis. Dollar weakened versus major peers such as euro and yen on Thursday due to growing expectations the Federal Reserve will pause its rate tightening cycle. Minutes from the Fed meeting revealed that several policymakers were in favor of keeping rates steady this year. Broader market sentiment turned slightly cautious in Asian trade as markets waited for concrete evidence. MSCI's broadest index of Asian Pacific shares outside of Japan was lower by 0.6. The China trade talks are just a first step towards easing tensions on both sides. While there's an agreement on less than thorny issues such as agricultural and energy, demands for verification and enforceable targets on intellectual property rights, they expect room for volatility in the lead up to the March 1st deadline, where negotiations on these issues need to be concluded. Most of traders still expect market sentiment to remain positive. The Fed has acknowledged market concerns with its language. Optimism on the trade talks is also boosting risk sentiment. Commodity purchases, such as the Canadian dollar, have been the biggest beneficiaries, improving this week. The loonie fetched 132.30. Covering to its closest level. Also supporting the loonie was the Bank of Canada's assessment that further rate hikes may be necessary. The euro and cable are each gained marginally on the dollar, fetching 15.47 and 27.90. Economic data in the Eurozone has remained consistently weaker than forecast over the last few months, especially in France and Germany, the Eurozone's economic powerhouses. Brexit woes are mostly likely to dominate sentiment towards setting British Prime Minister May's must-win vote in Parliament to get the Brexit deal approved, or risk seeing Britain's exit from the European Union descend into chaos. I did want to go in and catch over this. This is kind of like an outlook. Reuters puts out its overall poll outlook, and this is about the dollar running out of steam. The dollar rally is largely over, according to about 2/3 of the currency strategists polled by Reuters. After racking up its best performance last year since 2015, the dollar has lost momentum in recent weeks as the Federal Reserve signaled fewer interest rate hikes. In the January to second 9 poll, 75 analysts showed the dollar is now forecast to give up most of its 2018 gains. Basically, the dollar's run out of things to make it go higher. And we've been talking about that for the last couple of months, but I tell you what, it still has remained pretty close to its highs. The Fed has told us that they're probably at or near a point where they're going to pause interest rates, and we forecast the boost we saw to the U.S. growth last year is definitely going to fade. Those factors were really supportive last year are fading. So I don't see what's going to be a sort of a cyclical driver of dollar strength from here. While analysts predicting the dollar to underperform against major peers have previously been proved wrong, they're still forecasting it will reverse last year's gains in 2019. With economic growth in other major economies expected to slow and central banks not predicted to turn hawkish, a significant dollar side on any prominent upside for other major currencies will be limited. And I think that. I'm just looking for the dollar to give up, as this was stated, a good portion of its gains, but don't expect it to go to heck in a handbasket. I acknowledge the dollar fundamentals have been worsened, but I think they're probably worsened for the euro as well. And we might just have a sparring contest between them all year long, said Jane Foley. I don't see a big trend in favor of one or the other being particularly dominant this year. Sterling's fate, though, will be determined by how Britain's exit from the European Union turns out. While the dollar enjoys safety bet status last year after the U.S.-China trade war escalated, that view has faded recently, but the yen, the de facto safe haven currency, is forecasted in 2019 where it is trading currently. While it's tempting to ignore the flash crashes or chalk them up to technical issues, we think it's telling that the dollar yen ultimately settled more than 1% below its pre-crash level. This is one, and says following rocky signals from manufacturing most volatile equity markets, the drivers are for the JPN, dollar yen, or the yen itself are moving in sync. Yeah, that's one of the things that we talked about last week. Remember, I said there's a new sheriff in town. I think I was saying that on Friday, or maybe it was Monday. And hence, we're really starting to see the euro, not the euro, the dollar yen going and pair back in. Obviously, the yen strengthened. And, we were just hanging up yesterday right around this, almost at 9. And look what we've dipped all the way back. We actually came off more than 100 pips on that. And that's my mantra, late last week or at the beginning of this week when I was saying there's a new sheriff in town, meaning you can forget the dollar. People are going now into the yen, and we're starting to see that, which probably has a lot to do with, although it was hanging up around here with where the S&Ps were, That being said, and we were talking about this, Blake had mentioned a lot of houses were looking at the yen being the mover for the year. And so these people aren't going to get washed out of their positions very easily as opposed to smaller, traders. You can see here the euro continues to stay weaker here. Once again, like I said, on a very short-term basis, I would have liked although I'd woken up and it was already moving higher, is this dip here. We made it to 1534 and then we rallied almost 25 pips. This was the area here. I'd like to see it to come down here, then bounce. So we came up, of course, again, pressured. We talked about, remember I mentioned to Eric yesterday, I think the best we do around here is 1521. Well, we did make it to 1522. I think maybe they'll try and keep the pressure. Now, once again, keep an eye on this exponential moving average because that's shifting the momentum. So now the market on a very short-term basis will be trading with, with the momentum going against it. I'm liking stepping in right now. I would have liked the 21, but after only coming here to the 34 and then rallying so smartly, really anybody that got long, you think about it this way. If you bought here, they're putting their stops just below that. So they're pressuring these folks. How much further they can get down, I don't know. But any moves down here, I like that for the euro overall. Because when I look at it there, if I'm buying it at 1510, heck, I'm buying it nearly 60 pips from the high. Now, we are a little bit tired here, but I feel okay then, and that will come in close to 23%. And I think things have changed for the euro overall. Let's go on quickly into gold, and then we'll wrap up and get this analysis going. Gold gains as dovish Fed. One of the things that we talked about on the gold, and remember I said, was it, okay, it looked like it wanted to pare back, but one thing about gold, and we mentioned that even yesterday as it was paring back, was that when you looked at the weekly, it's still up there. I mean, it still looks good overall. On the day that it looked like, oh, this thing's starting to slide. Well, they haven't given up the ghost yet. Look at this, all the way at 1297. So once again, like I said, when you look at this on a weekly basis, when you look on a short-term basis, you're thinking, oh, well, you know what? It now is starting to pare back. But look on the weekly, even though last week it got basically, which was close to a almost like a gravestone doji almost. But look, you see here, it reminds me, once again, I said it yesterday, of the dollar. Remember how the dollar each week would, not the dollar, the Canadian dollar, what dollar CAD. And about a month and a half ago, remember we had that poor employment rate. And when I said, well, you know what, but the weekly still finished higher. Well, you're still seeing the same thing in gold. We're still going higher here in gold. And if we do finally start to give back in the S&Ps, it really opens the door for us to move higher. And I think there's still that opportunity. We can come up here to 1304. But we shall see. But on you look at it on a short-term basis, you're thinking, oh, this market is running out of gas. But when you see it, overall, you're saying, you know what, it's still holding up. So let's go on and cover the story in gold, and we'll get the heck out of Dodge. Minutes from the Fed's policymaker showed the policymakers said they could be patient on interest rates. Gold again is support out of the dovish Fed comments and institutional instability in the U.S. We've got markets pricing the possibility of a Fed rate cut in the year ahead. Well, I don't know about a Fed rate cut, but it says it resulted in lower Treasury yield, especially after the Fed minutes, which gave the dollar a bit of a kick down. There's a chance of prices breaking the resistance of 1300 with the present sentiment. Once again, I'm looking for 1304. Falling Treasury yields can translate to less demand for the dollar since the currency is used to buy bonds, a traditional safe haven. Meanwhile, Trump walked out of talks with Democratic congressional leaders on Wednesday over funding for a border wall, reopening the government, saying the meeting in the White House was a total waste of time. While the government shutdown is still far from resolved and Chinese trade talks just partly concluded, we are not sure that the turbulence in the equity markets is just over yet. Well, I believe that. One of the things I do want to point to, and looking at gold, and we got that comment yesterday. I posted it in the room. Very, very early yesterday morning, and I posted it on Twitter. Fitch came out. Yes, you must have seen those comments I posted. Fitch came out and they said their concerns about the more important than the shutdown was the concerns about U.S. debt, was the debt ceiling. And that really opens the door potentially for a move up here in gold. Well, gold could really start to move if that's able to go and grab a little bit of hold on. We'll see how that goes. Anyway, let's go and move on to, which I think provides a little bit of fodder for gold bulls. Let's go and move into the bias chart. So here's the euro. Where support, we already focused a little bit of time this morning on the euro, so I think you already know where I'm thinking support could potentially come into if we push a little bit lower. We're going to go right here at, we'll call it 1507 is a 23%. We'll split the difference between this. We'll call it 1508. And we're talking about where I think this whole area is good. Remember, I mentioned I had that conversation with Eric. I said, I think is the best week you can expect on that dip is 1521. This is a good area. But once again, the momentum switches here if this exponential moving average crosses over. So defensively, where could we push to? I think as low as 1508. So I think that's a very good area. I'll be happy to step in if we get down there. I want to see this market now with the pressure we're seeing here on the exponential moving average. We may get a little bit of move back up here towards 37, and we'll see if it comes back down to test. But I like I said, if it comes down here, I'm happy with this area here. Very happy to jump in at that point. So we're going to go split the difference, call it 1508. Resistance now. Where's resistance? Well, I think right here, 1561. Because my point is, if we get past here, we're probably going to make a move to about 1608. Potentially, it looks like we could get to 1616. So the resistance on a short term is going to be 1561. Essentially, that 1561 would work like a trigger. If you get back up there, then I think the market's going to say, whoa, I better not miss out on this move, and then everybody starts piling in, and then we just blast through these stops, and we're on our way to 1618, 1608. Let's go and move into the cable. We can get clipping along so we spend so much time on this. Well, we enjoyed this run up in here. We're really trying to hang up in here. Let's move this to the daily. And really, we got that close, the daily close, just a nudge above this 27. I guess we got it here, what, to about 27.89. We're talking about the key being 27.88. It opens the door for us to move higher, but the market's kind of giving back. Probably in a surprise with the volatility we've seen here in the cable. And we're looking here on the 2-hour chart. And at least for now, on a short-term basis, there's resistance, 27.98. And we've got just above that on the daily close. That's pretty key, but kind of giving back a little bit now. Where's support? Well, like I said, with the cable, and things are going to be pretty dicey over the next few days, I have to come in right here, which is going to be 27.13. 27.13 on a very short-term basis. Well, Aussie is getting a little bit tired, but it's still holding up very well. You may start to see this slide. This is, I wouldn't say it's quite reminiscent, but it's almost what we saw here yesterday with the dollar yen. Remember how this was hanging up here at this 2-hour, hanging up here at this 890. Looked like it wouldn't even test that 929, and then all of a sudden finally we started to slow, roll over, and roll over we did to the tune of 100 pips. Well, once again, now they're saying, you know what, that was really good, those meetings, but it wasn't. Now they're saying it wasn't a ministerial meeting, so maybe we've gotten a little bit ahead of ourselves. So we may see this Aussie going pare back a bit, especially if we see some volatility come in here to the S&Ps. Now, we made a pretty good run up in here, but we're starting to roll back. So we'll see how things play out, and we could find the Aussie a little bit on the defensive. So looking back here, we've had a pretty phenomenal run, though, nonetheless. Resistance we had at 71.98. Well, that's going to stay in place. No changes there. Support, well, here's that key 71.42. Here's where support's going to come in, though. If we go and test and get back below that, it's going to come in right there at 71.20. There'll probably be a little right here. We'll call it on a very short-term basis. We'll call it right there, 71.27. And let's go into the Kiwi. So it's 67.14, 67.74. Well, we haven't been moving a whole lot, but we did want to come back here on the Kiwi. We actually pushed this market a little bit further than I would have expected. Came in here and challenged the 68 cents. Support then is going to come right across there. Still a little bit too close for my tune. We're going to have to move this lower. If we do rotate lower, and I think we can, it's probably not going to come anytime soon, but the real support then is going to come down here right there at 67.21. Was resistance 68, we'll call it 68.01. Let's go move into the dollar CAD. Had a nice smart recovery. When we dipped below 132, I thought that was a good little opportunity. I picked some up myself, and I was thinking, boy, if they come back down 32, they came pretty close. And I think we are overdone. I think we have the opportunity. If you take a look at the move we've already seen here in crude oil, look at that move. What a move. So if we see this pair back and initially be looking at, God, that's still a ways off. That's $1 away. And that's not even giving very much of the move back. 50.45 and just below that, probably coming around right there. 48.92. So you probably see the CAD gives $1 CAD come back even further, or i.e. the Canadian currency give up some of the gains, phenomenal gains that it's already had. So when we look on here, support, short-term basis, we'll go right there with 32.07. 32.94, 32.88. Daily close support would be 32.96. So let's go with 32.88. It's a long ways off, but this market is very oversold, so they could come back on this. We'll look at it also on the 30-minute. Well, there we go. 32.69. We'll go with 32.69 here. Let's go into the dollar Swissy. Boy, did this thing break. Look at that. We had 97.76, and we really finally were able to break much lower. Break much lower, we did. Although we were below that pivot, that key pivot, so they were able to finally push 750. I guess we were hanging around here for so long. I guess they were bound to hit those stops, and probably wasn't likely that 76. Well, that was what was shown, and I thought this might have been too much, which was down here 49. Well, heck, they pushed well below that. Support. We'll actually have to switch over to 4-hour for a little bit better perspective. That's going to be support right there, 97.35 on a short-term basis. Well, we already know where the resistance is, which is that bias level of 98.02, but we're going to give it a little bit of room. Not much, but it's going to be 98.11, but that's still a ways. But like I said, I don't think it's anything that's going to come up for right now. Actually right here coming across 98.06 on the upside. We're pretty oversold, and I think is going to necessarily pop up in the next day or two, but a level that the market would look to target on an upside, 98.06, which would be just a spit away, but a touch above the bias pivot here. So 98.06 for resistance. If the market can stretch up there, considering how oversold it is. Now let's go into the dollar yen. Well, yesterday we talked about if they could possibly even stretch it, because we talked about the importance of this 927 here. and they really were trying to push this for all it's worth on the S&Ps. And one of the things that we talked about was that Blake had mentioned a lot of houses were looking to be, buyers of the yen. So it wasn't, it was, we were alluded to, these people weren't going to get shaked out of their positions very easily at all. In order for them to look to at least reassess their positions, we were going to need not only one weekly close above 927, because I think the shorts were in strong hands. Okay, I think the only thing that would have turned this around would have been, when we talked about that, two consecutive weekly closes above 927. That would have flipped things around. Wouldn't have gone bullish, but it certainly would have opened the door to move back up, which probably would have got us up to about 1091. But we, like I said, finally the market started to relent, and we did one of the things that we looked at. We saw, you can see here that even when the market was hanging, you did have on a short-term basis a spinning top here. So the market was losing some of its momentum. You can see right here, and now we've since then have gone and seen this market pair back. We'll look at it on a 2-hour chart. You see it a little bit closer. So they're really pressing it for all it was worth. They're even getting above this trend line. And I'm not much of a trend line person, but I do like to, as I said before, keep the trend lines. If I see something is rotating, or, we're on the precipice of a move, well, we got above it. But like I said, that was such a huge fall that it wasn't like something that the market would turn around and give back. And I'm talking about give back as far as mount a gain beyond the 927. I thought that was going to be fairly difficult. Well, we certainly did go on and come back in, we did, to the tune of 100 pips. Now, where would be resistance? Well, resistance is going to be what we were thinking previously on the way back, if they're going to try and defend it, was going to be this 855. Let's go and adjust this here. That will now be resistance here, 855, right there, if they get a bounce back. Support's going to come in here, which is going to be, and the market, I think you'd see some short covering come in a little bit, which is going to be 752. Still, the market's a little bit of ways away from that, but I think this market has the opportunity to continue to move lower. And as we were talking about, I think yesterday, I was saying we can probably get around the 690 before you can really start to see some even stronger short covering. But a nice support level should find some demand here, but eventually I think we'll be able to get to around 685, 680-ish here before you start to see a more definitive bounce back. So let's come in here. Okay, well, looking here at the dollar index, that previous weekly, we saw a great bounce back. And this is one of the things we thought on that bounce back. And we got much further than what I would have even expected. But we thought that that was really on light volume, because we talked about the bulls starting to rotate out of the dollar. And that opened the door, which I thought was going to allow us, and Friday, it didn't happen on Friday, to allow the momentum to really carry us slower. Well, we got past this 95.65. My initial downside target was 38. Well, we got well past that. But now we're seeing the market come back, maybe a little bit oversold, so maybe we can push it a little bit higher. We'll see. So we're looking at, as far as resistance, let's go and move into the 2-hour. Well, the 23% of this move, and let's show this. Comes in at 95.48, and we'll go with that for resistance. I definitely want to be a seller of the dollar. I think it's going to moves back. It's going to have a tough time now. I like this 95.48, and if they try to push beyond that, I think the market would have a tough time trying to get past 95.65. 95.65? Well, heck yeah, this is where that key level of help from the prior week. So any moves back now would be sold. What was previously support is now going to be resistance. So it'd be a two-step, 95.48 and then 65. You'll definitely find some additional sellers in here. It would actually take a daily close above 96.26 for the market to question this downside move. So you're looking at 95.48 and really 95.65 being pretty solid. Okay. Support on the downside. That was a pretty good little level right there too. 94.96, actually right there. Yep. So that would be support. We're still trying to push a little bit higher. One of the things I don't like, and I told you about this, and you see here we're pushing lower. You see now we've shifted into a downside momentum. Another thing is that I don't like is that when we came down here, I would have liked to have seen this market. Remember we talked about that jump up to 1537, and then we test lower. So now we've shifted into a sell mode here, and the market's going to be trading defensively. I like this area down here. I'm happy to go and step in, and knowing that I'm going to have some cushion below there around the 1595-ish or whatever. But certainly the momentum has shifted lower. And one of the things we talked about with the euro was, like I said, we came up here. When you look at this in context, is that we not only 1550 was fairly key, but we weren't that far away from the 61%. So they're pressuring. I still like the euro overall, but they're keeping that pressure for right now on here, and the momentum has shifted lower. Now we're probably trying to see the market push up a little bit higher, but for right now, the momentum has shifted, with downside pressure. We'll have to see what it does. I still like this euro, and as we come into the end of the week, got to think that we have the potential to eventually still push up here and challenge that 116. But as I mentioned, we took this dip down here to 34. We jumped up nearly 25 pips, and look how quickly we ran out of gas here. And that's why you're seeing this pressure here. We're looking at a 30-minute. You see here, the market comes off of this low, and I would have preferred it to have come down to just 29. Only made it to 34. We jump right back, and look how quickly we lose the momentum. And if you look at the body, we close less than halfway. You see, on the halfway. So that opened the door for us to challenge the lower. And henceforth, now we've got the downside momentum. Let's go and quickly get back, though. Just want to allude to that. So let's go and move into the gold market. Gold not willing to give up the ghost yet, and they're still, giving it the old college try to make a move up here. And we're looking at the daily. Key on the daily would be if we could close above 1294. That's huge on the daily. If we could close above 1294, that would open the door for us to move higher. Looking at it on a very short-term basis, resistance is right there, 1297. The real key, though, is that 1294. If they can get above that on a closing basis, we're just going to go right here because if we get past that, they're going to try and push those stops. So we'll put it right there for 1295. But on the weekly, we still haven't. That's why we're seeing that challenge, because we still haven't given up the ghost. The momentum is still pushing higher. The momentum is still to the upside. We still have to see much slower before, and you'd have to be focusing on the weekly close before you could say, okay, now we're going to see an intermediate pullback. If we were to get that, as I mentioned to you, we'll see some buys coming in at 1257 and definitely at 1248. Looking on the support side here. For right now, it's going to be 1286 coming across here. They're not willing to give up the ghost yet. And maybe we'll, as I said, I still like the euro overall closing out the week. So if we see the euro start to strengthen, that can open the door for this gold to still try and make one more push if we see the euro, get back its strength. Looking here for the 30-year bond. Comes in right there at 45.19, right there, 45.18. Starting to see a little bit of buying come in as the S&P's weaken just a little bit. Resistance actually doesn't come in until there, 46.23. Trying to defend this area right here. I wouldn't be surprised to see a little bit of a move back towards it, as we mentioned earlier, to the mid-30s, but that's going to be where the rubber meets the road, and see if we can add on to that. Once again, if you're scaling in, we talked about that 20. If someone was, let's say you came in like a third position at 21, another third at 1509, and the last third at 1496. That would be an option right there. If you're saying, heck, I don't want to miss this move. Getting onto the Boon. Resistance, we'll keep it quick. We're already running out of time. It's going to come in at 63.94. There's a case right here, and the market's already come quite a bit, but don't forget, equities are starting to pare back, so we might find a little bit further demand. So we're going to push this up here to 16.94. We'll also take a look at it on a fib. And that would be 63.97 would be the 61%. It will go 63.95 for resistance on the Boon. Support right there at 63.57. This one has been all over the place, but it's not a surprise to see us coming off these lows after we're starting to see these equities start to stall a bit here. Let's go and move on to the DAX. On the upside, we had this 972, and for good reason. You can see this coming across here. And the market did finally start to rotate a little bit lower. Short-term basis is going to be right there, 917. That might even be almost a pure rich at this point. But let's go right here. 906. 906. We had 924, and boy, they did go and push this for what it was worth on a very short-term basis at 924. But equities have started to ease back a bit. We came right into this 23% and have defended it. If they want to push a little bit lower, it's going to come in right there at 771. You can see here the disparity between the faster and the slower moving average on the 5 minutes. So we're a little bit oversold here. So if you're looking on a very, very short-term basis, what we could see is a dip to about the mid-teens coming in. Well, actually, right. Yeah, there's that 1509 again. If you're trying to just scalp it, once again, I'd look here to 1516, 1515. They may dip here to test the stops and then finally try and push a little bit higher. But once again, if you're scaling in, that 1509 looks good here. It's just that, once again, and look, and you can see here, it's been on a sell mode and continues to remain on a sell mode here on the short-term basis. So what you looked at is, like I said, with the market getting tight, doesn't mean you had to get short, but you probably would have questioned getting long. That as we started to dip back, the market came back with a pretty good ferocity right here to the tune of about 25 pips nearly. But then look how quickly, and when you see it on the 30-minute, we're saying, hey, well, it closed about halfway of the body. When you look on the 5-minute, look, we get this strong move back, and then look how quickly, not only that, look at that, we engulf this body, all the way into this body, even engulf right here. So that really opened the door for this downside momentum. And certainly you're seeing that here with the exponential moving averages. So the market is going to be trading with a defensive tone on a short-term basis. That being said, here's the bias chart. I'll get this posted in the room. And thanks for joining us here on the European Crossover webinar.